Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 22nd of September. Starting with the FTSE 100, which is surprisingly strong, based there at the 200-day line around 76.35. Just need to get an end-of-day close through that May resistance line around 77.90 now, and that would take us up to 8,000. Relatively confident about that, given that the market is now not overbought anymore, and we have both the 50 and 200-day lines rising, which theoretically means we could be in the run-up to a golden cross maybe by the end of the month or early next month, but obviously very early days yet. Below 76.35 and the 200-day line risks a move down to the floor of that rising August trend channel, 75.20, which is also where the 50-day line is at the moment. But as I said, at the moment, looks like a mid-move consolidation ahead of a move to the upside, which, as we'll see from the other markets, seems to be at odds with the prevailing trend. Here we've got the DAX, and here a market that's sort of rolling over after the failures at the 50-day line, 3 failures at the 50-day line. So for the market then not to go down would be quite unusual. We were actually also just toying with the 200-day moving average, 15,500. I suppose there's a chance that we'll find support here, which is post-July support with this market. Otherwise, the risk is to a May support line projection, 15,100. Only back above the 50-day line now really turns this market properly bullish, given the RSI failure at neutral 50 that we had this week. Moving on to the Dow, which is also in a slightly precarious position. We've broken that line, uptrend line there from last October, 34,400. Below that, obviously, there was the August support area, 39,000 or 33,900, and then the 200-day line and June-July support at 33,700, which hopefully will be the low of this move. RSI at 36, so still allows for a day or two of weakness. And at this stage, early and end-of-day close back above that broken October line, 34,500, really delaying the breakdown on what is, as I've said before, a double-shouldered head and shoulders over the course of the summer. So 2 shoulders there, and both in August and September, with that peak there at the turn of July, August. On that basis, we would be heading much lower than the 200-day line, probably down to 32,000 or so. Moving on to Bitcoin, which has died a death, but at least it's dying a death at a relatively stable level, above the uptrend line there from January at 26,200. Still waiting for the 200-day line to break and that July resistance line at 27,900 to get this market out of the doldrums that it's been in since that bull trap top through 32,000 back at the beginning of July. Moving on to the pound, which I covered ahead of the interest rate and non-interest rate move, and you can see that clearly the currency traders are thinking that interest rates have peaked. The risk was a break of the 200-day line. 124.40 could take us down to the main neckline support there from last November at 120.30, and that also ties in with the floor of the June falling trend channel just below $1.20. So at the moment, we seem to be making a beeline for that 120 area, and maybe rather lower than that. The only thing slowing it down is the RSI is oversold as it was during the Liz Truss era last September. Moving on to gold, which is going the other way at the moment, and therefore worth a look as well, with a line of resistance there from May, and the 50-day line rising as well. $19.60, $1,960 rather, and above that looking for up to $20.50 by the end of next month. Obviously that's a punchy call, but with the bear trap rebound from below the 200-day line, the rising 50-day line, then one would be relatively confident of a decent move. Moving on to the stocks, and starting off with Arkle, which has been in the doldrums for quite a long time now, but it does look as though the shares are finally getting their act together. Just breaking that line of resistance there from back in December, and the 200-day moving average at 0.44. Above that, looking for the top of the broadening triangle from last October as high as 0.9 pence by the end of next month, i.e. by the end of this October. Bullish divergence going into this as well, and a gap close buy signal if we close above 0.4, which hopefully we'll do today. Stock which I haven't looked at for quite a while, and it is Agronomic. Here it looks as though we're breaking out of this falling wedge, which has been in place since the spring, and also breaking above the 50-day line around 10 pence, above 10 pence. well, as many days as possible above 10 pence could give us a target up to 12 pence by the end of next month. But I suppose the message there is just that there is a slow turnaround for that market. On to Blencowe, which came up with a cracking RNS today, and although the shares did push back up to the top of the recent range, around 6.3, 6.4p, they've come back, which rather suggests that there's still a pesky seller in there, because that pesky seller has kept on selling anything really above 6 pence. Unbelievable given the how good the news was, but I suppose that's the bear market that we're in at the moment. Like to see an end of day close back above the 50 and 200 day moving averages at 5 pence. So 5 pence plus I think would be fair after the bear trap gap reversal that we've had, and really want to see this market stay above the floor of that rising trend channel from October at 4.6 pence. I think with the news that we've just had, for the shares to be anywhere near that level, sub 5 pence, I think would be rather cruel even for current market conditions. Moving along to Cloudbreak Discovery, which seems to have revived itself and bounced off, or just above, the old support there from June, 0.36. Nice break above the 50-day line at 0.48 yesterday, and looking for initial target here at 0.9 pence by the end of next month. Big picture target, which is worth mentioning, because obviously we had that big spike back in June, July, up to 1.5. But initially, while we're above resistance on the way down at 0.6, looking for 0.9 pence on Cloudbreak. Next up is Pharaoh Alloy, which I haven't looked at for quite a while. Here we've got the potential for a gap close buy signal. We've also got a bear trap island reversal, so we gapped down in August and gapped up this week. That suggests that we should at least head back to the 12 pence area, which is post, I suppose it's 2023 resistance, really, so 12 to 13 pence by the end of next month, hopefully a bit sooner. But that bear trap gap reversal, quite an attractive setup there, even though the shares are very illiquid at the moment. Moving on to Fulcrum Utility Services, where obviously it's a chart which sort of gives you nightmares probably, but here potential for a breakout, falling wedge break there through 0.17 pence. If we can close, get a weekly close above that, then looking for up to, initially up to the 0.35 area, which is the bottom of the gap down from last month, then up to 0.4. But obviously we don't want to see any price action here back below 0.15. If that happens, even with the bullish divergence that we've had, it probably means this is not a situation for the bulls to be involved in. On to Iqai, which I'm covering again just because it's a lovely little chart that it's got there. Homing in on the top of that rising trend channel, 6.3 pence at the moment. That's a channel there from back in January, above 6.3 on a weekly close basis, looking for 10 pence as perhaps as soon as the end of next month. But a beautiful saucer-shaped reversal, slow burn to the upside that we've had over the last couple of months there as well. Stock which I haven't looked at for ages is Let's Explore. And here we've broken out a wedge and broken above the 50-day moving average at 2.6 pence. Initial target here obviously around 3.1, and above that looking for the top of the range and the top of that rising trend channel from December at 4.5 pence. And hopefully we could see that by the end of next month. Another stock which doesn't get much airtime, and I haven't looked at for quite a while as well, is Nostrum. And I wouldn't normally look at this, but we've had multiple bounces for the shares at and above a rising 50-day line, so that suggests that the current breakout, narrow breakout through 13 pence could have legs. Above 13, we're looking for 24 pence by the end of next month. If you're cautious, I suppose you wait for the 200-day line to break, but that would be giving away the upside, and ideally we stay on the right side of 10 or 11 pence, I think probably the stop loss there. On to Optibiotix, which seems to be taking over the world, if you judge by the latest RNS. Here, unfilled gap to the upside, so it's a bear trap gap reversal from below the old July support there at 24.6 pence, above 24.6, and the top of the latest gap. We are looking for a return to the 45 pence area, hopefully by the end of next month. There is a resistance line there from back in July, so that also ties in that we need to stay above the 25-26 pence area. Sharply rising 50-day moving average as well gives confidence that we are ready for a new leg to the upside. Speaking of upside, plenty of upside in the recent past on Pantheon. What we'd like to see now is the shares get back above the original target, or one of the original targets, which was 31 pence, and the 200-day moving average at the same level, so above 31, still looking for the shares to fill that gap up to 50 pence, perhaps as soon as the end of next month. On to Plexus, which has also been one of the few massive winners that we've seen in the market. Initial target here was 10, then it was 14. 14's now become support. Above 14, looking for 20, and then if you're a fan of the shares and an optimist as well, up to 31 pence maybe by the end of next month if you continue at the current pace. But maybe the shares will have a little bit of a pause around 20 pence. On to the last couple. The first one is SupplyMe, which is obviously always in the eyes of the bears, and here looks like the bears may be disappointed over the recent or the near term, in the sense that we're just breaking a line of resistance there from back in May around 0.11, and we've also broken above the 50-day moving average above 0.11, looking for up to 0.19 by the end of next month, which would be obviously quite a coup for the bulls, especially after that bear trap that we had at the earlier part of September below 0.09. Nice little setup on the last stock today from Winwood. Here, unfilled gap to the upside. We had a gap close buy signal to start the rally there, back around 40 pence. Unfilled gap to the upside in the middle of this week, and we're above the 50 and 200-day line, so above 50 pence. Looking for up to 80 pence by the end of next month, so hoping for a rally like the one we had back in June. That's it from me today. More updates over the weekend.